Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INRBonds. I'm Arjun Patsarthi, and today's markets conditions for bonds are looking much better than what it was in the whole financial year so far. Government bond or gsecs have seen yields rise as the markets were worried about inflation, and the central bank, which is the Reserve Bank of India, had to come in and protect the bond yields from government bond yields from rising so that to keep the borrowing cost of government down. The markets were worried about many factors in this last 5 months. Largely, one is the COVID, second wave of COVID, forcing lockdowns and worried about revenues and borrowing of the government and huge government bond supply. Then the market saw inflation that was rising and rising, and inflationary expectations were rising. And also the fact that the central bank had to step in to keep yields under check. The markets were slightly concerned about the true levels of yields. The 10-year government bond or the 10-year GSEC, a new bond was issued at 6.10%. It was maturing in 2031. Once it was issued, the yields went up by 6.25% as the markets worried about a whole host of factors, which I mentioned just now. But then the yields have started to come down. So when yields rise on bonds, it means that the market is bearish on the bond. And when the yields actually start to come down, that means that the market is turning bullish. So like the Indian monsoon, southwest monsoons are coming to a close, and maybe as it comes to a close, even the clouds are lifting over gsecs. So we have seen improvement in government finances. The GST collections are topping over rupees 1 lakh crores despite lockdowns. Then we also saw exports jump 45% in August, though from a low base, but it's still a very good, strong sign of export growth. And with the economy growing by over 20% and looking to grow higher, and also the fact that equity markets are doing extremely well with Sensex at record high levels, and many corporates are generating huge amounts of profits and cash flows, the tax collections to the government is looking to increase, and this keeps the revenues pretty positive for the government. And the bond markets are now less concerned about government borrowing and revenues. And that's why the bond yields are coming down. So this has a general effect on the markets elsewhere in corporate bonds and especially in the corporate bond market, where the markets tend to start to get more comfortable with interest rates offered on corporate bonds, given that government bond yields are trending down. Don't forget to subscribe to our YouTube channel and also visit INRBonds for all your bond information and research, and visit our Quick Invest platform for individual investors and financial advisors to check out our curated list of bonds and invest in the best, most informative and seamless manner possible in the market and transparent manner. Thank you for listening in. I'm Arjun Patsarthi signing off.